Hello there, welcome to the Money and Markets podcast with me, your host, Kudzanai Sharara. Some of you might have heard me on radio, that's on Capital FM, where I'm there every weekday in the morning, 7:30 to 8 a.m., talking about on the program Business Focus. By the way, the Money and Markets podcast, they've got two versions. One is on basic financial literacy, where we talk about all things about managing your money. The other one is on investments with a special focus on the Zimbabwe Stock Exchange as well as the Victoria Falls Stock Exchange. But today's episode is about the ZSE. The 2024 report card is out, and it looks like despite record triple-digit gains, the ZSE was negative in real terms by approximately 6%. So although it managed to beat inflation, it was hit by the vagary of currency depreciation. Remember, the local currency, which was actually losing value from the start of the year when it was still the Zimbabwe dollar, and also when it became Zimbabwe gold, it was still losing value. So this had a negative impact on stock market performance. There were also liquidity challenges, and especially in the second half of the year. Now, the big question many are asking me is whether they should invest again this year on the Zimbabwe Stock Exchange, given the losses they had last year. My answer is absolutely yes. A stock market that is significantly down, or that was significantly down last year, can actually present some interesting opportunities for investors. And here is why. I'm just going to give you some tips or some explanations why it makes sense to be investing in a stock market that was significantly down last year. There is potential for rebound. Stock markets tend to have cycles of ups and downs. One, a down year can often be followed by a period of recovery and growth. Number two, if you believe in long-term health of the market, a downturn can be a good time to buy in at a lower price. You know, they always say buy low. One of the fundamental principles of investing is to buy low, sell high. It's the basic one. Buy low, sell high. When the market is down, stock prices are lower, allowing you to purchase more shares for the same amount of money. And if the market rebounds, those shares will increase in value. You also need to focus on fundamentals. I don't invest in the market. A market downturn can be a good time to focus on the fundamentals of individual companies. There are companies that are still doing well out there that are listed on the Zimbabwe Stock Exchange. Look for companies with strong financials. We can see those numbers, especially now that most companies are reporting in US dollars. Solid business models. That's what we want. And good long-term prospects. There are companies like that. These companies are more likely to weather market downturns and thrive in the long run. You can't tell me that all companies in Zimbabwe are doomed. There are still good ones out there. You also need to diversify. Diversification is always important to have a diversified portfolio across different asset classes and sectors. So you've got your shares, you've got your ETF, you've got your rates. This can help to mitigate risk during market downturns. However, it's important to be cautious and to consider the following risk. Where there is return, there is also risk. High risk, high return. They always say investing in the stock market always involves risk, and a down market can be particularly risky. Make sure you understand your own risk tolerance and invest accordingly. Consider the overall economic conditions and the reasons for the market downturn. You need to know, why is the market down? Like now, we know the market is down mostly because there isn't ZIG liquidity. If there are significant economic challenges, the market may take longer to recover. So it will be crucial whether ZIG, there's going to be an increased supply of ZIG going into the next year. Don't just blindly invest in any stock. Do your research and understand the companies you are investing in. It's also important. In conclusion, a stock market that's significantly down last year shouldn't necessarily be a no-go area for investors. It can present opportunities for long-term growth, but it's important, like I said, to be cautious, do your research, and understand your own risk tolerance. I can't stress that enough. Wherever there is high returns, like in this case, when stocks are on the floor, there's potential for high return, but there's also potential for high risk. Remember that it can go for much longer. Remember, one of the reasons why the stock market in 2024 was down in real terms is because in the second half of the year, there wasn't enough money, significant amount of money that was going into stocks. And people were looking for the ZIG. The borrowing costs for the ZIG were also very high at 35%. And those with shares chose to sell their shares than go and borrow from the banks. And this resulted in a bear market, especially in the second half of the year. But like I said, it presents a buying opportunity, even if it means that for the first half of the year or throughout this year, stocks will be lower or will be undervalued. I think it will be good because it allows you to accumulate as many shares as you can. But also, if the market is going to be volatile, take advantage of the volatility of the market. Just make sure that you know what is your low price. If a certain share hits this particular price, this is my low price. You need to know that. And what is your high price? If a certain share moves up to this particular price, this is my high price. Then you sell. So that will allow you to follow the basic rule: buy low, sell high. You need to understand what is the low price, what is the high price. And if you want to do it yourself, I always say that if you want to invest, first you invest in knowledge. You can do that by watching podcasts such as the Money and Markets podcast, where we share some investment, educational tips, rather, informational tips about investments. You can also go to the ZSE training website. That's www.zsctraining.co.zw. They've got modules that are there that you can also help you to be well informed before you get into stock market investments. And if you want to invest, you can go through via what we call stockbrokers, or you can go through asset managers. Stockbrokers, they take they will give you advice, but they will take your instructions mostly. Asset managers, they will most likely do everything for you after an assessment of your financial situation, your financial objectives and goals. And then if you're one of those who want to do it yourself, you can open an account. There are applications, ZSE Direct. It's an application that you can find on the Google Store and the Apple Store as well. There's also VFX Direct for those who want to invest on the Victoria Falls Stock Exchange. Or you can go via the website www.zscdirect.co.zw. You'll be able to open a trading account on the Zimbabwe Stock Exchange and be a happy investor. And don't forget to subscribe to this channel. It's called Z Sharara. That's the channel. And this particular podcast is called the Money and Markets Podcast. So make sure you subscribe and also hit the notification button so that when I post a new video, you'll be notified and you'll be able to get informed. Until next time, it's the Money and Markets Podcast brought to you by me, Kudzi Sharara, your markets advocate. Thank you.